All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Friday, January 10th, so the end of the week. Kind of capped off by a little bit of weakness in equities, and I think these Fridays have kind of felt like that a couple times. I think last Friday we were in a different situation, if you remember. That was more of a situation where global tensions just started to increase. And as we thought, we had a little bit of a sell-off last Friday at the end of the day because you just kind of felt people just didn't want to own a lot of equities into the weekend, or a lot of risk, I should say, into the weekend. This a little bit different. I'm not really sure why we kind of sold off at the end of the day, even though we bounced a little bit at the end of the day. The jobs report was a bit weaker than expected. There wasn't much initial reaction to that, to the jobs number. But we did end up kind of sliding throughout the session. Of course, here's the numbers for the job report, which you're going to hear a lot in financial media, so I'm not going to talk too much about it. The one takeaway that I kind of thought was interesting is that, maybe today it did have a little bit of a reaction, but these jobs reports, they used to be big, a really big thing on Wall Street, right? You would really kind of watch out for this report because it would be market moving. Doesn't seem like there's a lot of economics that are really pushing around the market too much. I think part of that has to do with the Fed. The Fed just basically is at a standstill. They are still pumping some money into the market, so that seems to be more of a factor than what we're getting, unless the we see big deterioration in the economics, which I don't think you could really say one report is. Remember, we had ISM data this week. Manufacturing was weak, but non-manufacturing was very strong. So it's kind of some data points are coming in positive, some are coming in a bit weaker. So for the day, where do we finish? SPY just finished down 31 basis points. Not really a whole heck of a lot to conclude from that. Of course, we did start the day higher. Futures were rallying this morning, so that becomes a little bit, I don't want to say more painful, but just a little bit of a harder day when we're bid up like that. Going into, it's kind of weird that I thought we were bid up into the jobs data, but it is what it is. Uh, and then what did perform well? Bonds had a good day today. They finished up almost 1% on the day, so they were strong. They did finish down for the week, but a crazy week at that, right? Sectors today, pretty kind of risk-off stuff. The gold miners finished positive. We detailed the Newmont mining trade. I think pre-market we did that. And you could see a lot of sectors, the semis kind of jump off the page to me. There was some weakness in the semis. Bios as well, which started the day. Some of them, I think IBB was up earlier and gave back some gains. So, again, kind of a little bit of deterioration. I'm just not reading too much into it on a Friday, considering the week that we had. But yeah, so my theme of the day is equity's a little bit tired. So here's I always like to detail the performance at the end of the week. For the week, I would highlight, in this, of course, the Qs were the big outperformer. Interesting. I want to go over a chart here in just a second. Just bring this in here. But look at IWM. Just did not participate. It just seemed like kind of odd all week long that small caps were just basically lagging. And then SPYs finished right in the middle of that. We'll put a green on this one as well. Up 1%. Diamonds, same. Emerging markets, international, both finished up for the week, but not up, but fractionally, I would say. There's the bonds I mentioned, and even though we rallied today, they finished down for the week. So what performed best for the week? Well, a couple areas, and really strong performance out of tech, both China internets, which of course are like China-based. Sorry, I was going to say something and change my mind, but they almost finished up 4% for the week, so really strong performance there. Software was also, just depending on what name in the software group, some of these things were up like over 10% for the week. stellar performance. And I think, like, I put out every weekend we put out a watch list, right? And this week I had a lot of watch lists, names that were interesting to me, just to see how we performed for the week. Up 2.2%, so a little bit better than the Qs. Obviously, much better than SPY, much better than small caps. So this was our list. You could see there was a couple names, that, like, we had some defense names in here that, of course, didn't pan out. I had a couple energy names in here too, like even this KTOS, right, which was something I tried in the beginning of the week, but took it off pretty quickly for a small loss. Again, just reiterating some of the things that I mentioned, some of the points that I made this week, is that, hey, if you put on a trade and it's not working and you think it's not going to work, there's no problem taking it off for a small loss. Small losses do not hurt anybody, right? That's the whole fundamentals of trading, right? You want to let your winners run, but if you have trades that aren't going to work, or you think that they're not going to work, you just take them off. I know sometimes it's a very difficult lesson to get over in trading, that people think that if you're going to sell, you're admitting that you're wrong. You're admitting that you lost, but it's really, if the sooner that you could get over that little ego trip and just get out of a trade that's not working, you're just saving yourself. Because also, once you do that, you can concentrate your energy on other places. So it's really, again, I try to talk about, because I know a lot of people don't, this, some of the losers and how you manage the losers. Because let's face it, everybody has losing trades. They just don't admit them on Twitter. But I think really that's what separates the best of us. The boys from the men, and the girls from the women, is that how you handle those losing trades. So anyway, I wasn't going to go off on that too far, but it was a trade that I started this week and got out, and no issues at all. But then let's talk about the positive. Again, I always talk about the negative first, but the positives, AYX, which was a trade I had this week, Salesforce, which I traded this week. So like I said, some of these names were up. Some of these software names were up over 10%. It's up. That was up 12%. Salesforce was up, for a big company, up over 8% for the week. So I think mission accomplished, right? For putting out 28 names. NTNX, which is another name that some traders played in the room. Shopify was up 6%. And then you've got a lot of names, like Akamai was up 7%. Datadog, which was another name that I played. I actually think this is interesting, this Datadog, because I took the trade off. But it's kind of doing a little bit of digestion here. So I'll be looking at this name next week. I like this, like a breakout of value. Again, this is all the history that we have in this name, but doing some digestion right there. All right, and did I not have Okta? I guess I didn't have Okta on the list, which is something also that I was long, maybe because I was already long it. But again, we had KWeb on the list this week. PayPal was another name that worked very well, up almost 4%. Plan, which is a name that I own in the Tribeca Trade Group tactical portfolio. So again, a lot of big win, a lot of really nice winners this week that we showcase. And again, as always, when I put out this list, right, for members, I always mention it's a starting point, right, to basically start, have a list of names. Basically, what I do is I go and I set alerts on every name, and then when they trigger, I've got something. If the names don't trigger, whatever, doesn't, then there's still, it may just take them a little bit more time. They may not trigger, so that's the name of the game, and you put the homework in and it really works out. So I went over this week's performance. What I wanted to talk about, a couple other things. I sent out a midday video for members, just talking about, like, getting ready for the next couple weeks and some thoughts. Basically my thoughts are that we've had a really good start to the year. I think I don't think I'm going making a huge jump as far as a conclusion, but I think most Tribeca Trade Group members have had a really good start to the year. Now you have to manage it, right? We've got earnings season next week. I think really that's the big thing that I'm looking at, is not just for next week is where the financials start, but really the big tech names that are going to report. I think that is most concerning to me of all the events on the calendar. Things like the China official signing of phase one trade deal, but really the earnings. So one of the things that I mentioned is make sure that you, and we were talking about this at the end of the day too in the trading room. Make sure you're locking up some of your gains, right? If you're like me and you trade a couple different accounts, if you have like a short-term trading account that you trade options in and you're doing really well, make sure that you lock up some of those, some of those gains. It's very one trader in the room suggested, hey, you actually take out all your gains of 2010 of this, sorry, not 2010, 2020 of this of this decade for a week and a half. Just take them out of your account, put them in, and then you're not going to give it back, essentially. Now, of course, you still have your original account value that you came into the year with, but that's one strategy that I think is pretty good. So just bear that in mind. We've been rallying pretty nice, and there's things that you could do to manage and not give back any gains. Now, listen, I don't know that what we're going to get in the next couple of weeks, but my thought is earnings season. It's usually a pretty choppy time of the year for those weeks where all those names are reporting. I do think the names are going to have to they're going to have to talk about their guidance in a positive fashion. If they don't, you're probably going to see some stocks get hit a little bit. So that remains to be seen. We don't know what we're going to get, but we know that earnings is coming. All right, so that's my thoughts for the weekend. A couple of must-watch charts. I mentioned I would look at a couple of these things. If we look at like a couple of relationship charts here, we could look at, oh, not that one. This is IWM versus Qs, which is also telling. The small caps are just not participating. And if I go over to IWM SPY, you could see that that's also like, it got close to kind of breaking the trend. But small caps, remember, the small caps, they've got a lot of financials in them. They've also got a lot of healthcare. And then there's some smaller tech in there too. But yeah, just not performing. I thought biotech might turn the corner today. It did not. So I put on a Amgen trade today. I hit a target in that one. So, and then it kind of sold off the rest of the day. So I had a question at the end of the day. What do you think? What's your opinion? It's kind of giving back. It's reversing. It did, Amgen, but I'm okay. I'll give it. Like I said, with this Friday price action, not the best. It's not the best candle in the world, but that's why you have targets out there, because I did take some off the table for gains. But we'll see how this works. I'm looking for a move to the top of value, but sold off a bit. The nice trade for us today in the room was Win. Notice it gave back all those gains. It still finished up 60 basis points, but that's exactly what you get sometimes on a rumor, right? And we sold into the rumor. So that was my trade of the day on the upside. A couple other trades in retail. For me, again, I like to talk about not just the winners but the losers. I put on a trade in Restoration Hardware yesterday. Just kind of fell apart today. Probably a bit of a seller in the room, and tough because it kind of gave a little bit of a false signal that it was turning. But I don't like this on decent volume. So yeah, that was my loser of the day. All right, guys. So that's it for today's video. I hope you find it helpful, but you can see we don't know. Sometimes we see some type of what looks to be a reversal bar, but if you don't lose any of the short-term moving averages, it's not. It ends up not being a reversal bar. So I think continue to kind of just take this market for what it is. We're in an uptrend. We've been moving higher, except for today, market breadth, which I will just bring up here, which is not going to update until tomorrow. This is the advanced decline line. it's very strong, right? It should come in a little bit, but again, if you've been trading this market like pretty actively for the last few weeks, people are relishing, when you get a little bit of a pullback. So I, again, wouldn't mind that. You just have to position correctly for it, and that's something that I've been talking about a lot, is making sure in this strength that you're taking off more trades than you're putting on. But as I have said many a time, is that if you're an experienced trader, you actually like pullbacks in uptrends, right? They give you an opportunity to get in at, into support. It shakes out some of the weak hands in the market, so you kind of learn to really like a little bit of a pullback. It also gets some of that really hot sediment out of the system. All right, guys, so that's it for the weekend. Again, we'll be putting out our weekend member video as well as our watch list. So if you're not a member of Tribeca Trade Group, please go ahead and sign up. You could see the link is just is posted right to my Twitter page at C Fromhertz. All right, guys, have a great weekend and see you Monday.